Welcome back. If you're like me, you don't want to invest based on random advice. You want a framework. Today, I'm sharing a simple, evidence-based method I use to find companies with genuine long-term growth potential. This is day one. Let's learn something valuable. When we look at stock market, it's easy to get distracted by daily price movements. But in long term, only one thing matters: earnings. The stock market is simply a reflection of companies' net income and the market's expectation of its growth. So, our growth is to find businesses that can sustain growth and their net income. And there are only two fundamental levers a business has to do this. Lever one, growing the pie, the revenue focus. Imagine you own a small shop selling a product you believe in. The first way to grow your profit is simply to sell more. That's increasing your revenue. If you sold 500 units last year and 600 units this year, your revenue grew. Lever 2 is increasing efficiency, the profit margin focus. Second way is to get smarter about the operations, maybe find a better supplier or reduce your overhead costs. You're selling the same amount, but now more of that sale drops directly to the bottom line as profit. That's increasing your profit margin. Both methods are powerful ways to boost net income. A great business can utilize both levers, but the real challenge is finding out if they can do it for the next 10 years. We need a checklist. So, number one is growth runway. Is the market saturated? You need to look at the market. Is this company already everywhere, or does it still have a huge opportunity to expand? This growth runway is essential for long-term revenue potential. We favor companies that still have places to grow. Number two is unfair advantage, the moat. This is my favorite term from Warren Buffett. The moat. It means an unfair advantage that protects their profit. Are they defensible? A simple way to check is looking at their historical ROIC. Return on invested capital. If their ROIC is consistently over 10 to 12%, it suggests that they have a competitive edge and can generate profits efficiently, even against the rivals. So what's the plan? Listen to the leadership. Finally, we don't need to guess. The company's leadership often tell us their plans. By reviewing the earning calls transcript, you can hear directly from CEO and CFO how they plan to grow revenue, where they plan to cut costs, and what new products they are launching. This gives you the context to make a calculated decision. Finding a great investment doesn't require luck. It requires disciplined focus on earnings, checking for clear growth runway, and identifying that crucial competitive moat. Do this research and you move from speculating investing with conviction. I hope this framework helps.